Hi friends, welcome back to the channel. I am super excited for today's video because I'm bringing on a very special guest that I think you guys are going to love, and you're going to get so much value out of this because today we are talking all things on the financial side of running your own business. This is something that I get tons of questions about all the time, just everything financial, whether you're running an Etsy shop or any kind of small business online. It can be so confusing. So I'm really excited to bring on this guest today. Her name is Janet LeBlanc, and she runs Paper and Spark, and she is a certified public accountant or CPA. And I love her take on things because she actually has a background herself of being a maker and a small business owner and selling handmade goods. So she gets it coming from that creative and maker side. So I'm going to go ahead and bring her on and let her introduce herself to you guys. So, hey, Janet, welcome to the video today. So glad you could be here.
Yeah, thank you for having me. Hello.
Yes. Well, I'm super excited to dive into all of these juicy financial questions. But first, can you just tell us a little bit about yourself and what you currently do?
Sure. So, like you said, my name is Janet. I run Paper and Spark. I started Paper and Spark back in 2014. And I got started working in public accounting straight out of college a long time ago. And it ate away at my soul. I was not cut out for a cubicle job. So I started looking for a creative outlet, a way to use my right brain. I think it's the right brain, right?
I
The
think
creative
so.
side,
I
yeah.
always get that mixed up.
Yeah. And so I taught myself how to make handmade jewelry. That was like the easiest thing that I could figure out how to do. And I opened an Etsy shop called Lazy Owl Boutique in 2011 as like my creative side hustle. Lazy Owl Boutique is like a really terrible name for a business also. Side note.
Realize later, right?
Yeah. Who wants to buy
Hindsight.
jewelry from an owl that is lazy? I don't know.
Oh my
That's when
goodness.
owls were really big, right? So,
Yeah, right. I get that.
yeah. So I loved being a maker. I sold jewelry for almost a decade and sold locally where I lived in Houston at the time. I just really loved being a part of the handmade community. I loved being an entrepreneur. But I just kept getting called back to the accounting side of things. There were so many questions and so much confusion from other makers that I met about, like, am I supposed to be charging sales tax on this, or how do I pay myself? How do I track this in my books? Am I just a hobby? I don't understand how I'm going to be taxed. So many questions, and there wasn't a lot of information out there at the time, especially for physical product sellers, for handmade sellers, on how to answer those questions. So I really didn't want to, because accounting is just not the most glam thing, but I'm so glad that I did decide to start Paper and Spark in 2014. My goal was really to bridge the gap between my accounting knowledge and the maker community so that other creative entrepreneurs could get the information they needed and feel good about it and move on to doing the stuff that really lights them up, that they love to do, and be able to pay themselves for their time and their work and feel confident that they understood the financial side of running a business.
Yeah, definitely. Well, I'm so glad you did too, because I know I personally have found myself in a spot of like so much confusion before over the years being on Etsy, like all things taxes, every kind of tax, the estimated quarterly
Right.
sales tax. It's just like it can be overwhelming for someone that's creative that is going into this thinking, oh, it'd be awesome to like start my own creative business. And they like to make things, they like to create whatever it is that they're making. But it's like the financial side of things is a totally different beast to tackle. And it almost seems like the more you start to try to like research it, the more like down the rabbit hole you get. And it just gets more
Exactly.
and more confusing. So there's not many people that I have like talked to that seem super confident and that they know exactly how their shop is supposed to be run financially. So I'm so thankful for people like you that do understand it and can just like make it plain for the rest of us. So that's my hope, is that today we can kind of clear up some of that confusion. Can you tell us like why, first of all, just kind of like an overview of why the financial side of things is important and why it's important not to just, let's say you're starting an Etsy shop or an Etsy business to go into it just kind of like willy-nilly and like, oh, I'll pay myself a certain amount, and like not really put a lot of thought into what you're paying yourself or your bookkeeping or accounting or
Mhm.
taxes. Why is it actually really important that we take, know what we're doing going into it from the beginning?
Right. It's understanding your numbers and understanding your financial responsibilities. It's important for several different reasons. Some of them are like fear-based reasons, which I don't really like to focus on, but those are things like, if you're not operating properly, if you're not filing the appropriate paperwork, you risk fines, being audited, getting in trouble, like that sort of thing. So there's always that aspect of why it's important to do it. But beyond that, numbers are facts, especially as creatives. We run by our gut a lot, our intuition, our feelings. There's absolutely nothing wrong with that. But I've seen a lot of business owners, get to the end of year one, get to the end of year two. It felt like I was doing well. I had orders, I was making things, I was shipping stuff, but why do I have no money left in my bank account? Why don't I have enough funds to buy this piece of equipment? Like I thought things were going well. Or they are backtracking to do their taxes for April 15th and they're like, man, I had no idea. Like I spent almost everything that I made. So knowing your numbers, getting in the habit of tracking, especially your spending. I mean, track your sales too, but know how much you're spending. Getting in the habit of doing that. The earlier on you embrace that side of running your business, the better off you're going to be no matter what. Understanding your profit margins so that you can pivot more quickly. Like, hey, I'm making sales, but I'm spending most of what I'm making. It's time for me to increase my prices or change my product line, or charge for shipping. Maybe it's something as simple as that. Knowing those things and learning those lessons that your numbers are waiting to teach you earlier on means that you're going to be more profitable for the long term, means that you're going to be able to pay yourself for your hard work. You're not going to get burnt out as quickly. It's just really key to becoming a smart, sustainable business owner.
Yeah, definitely. I totally agree. You would rather do it on the front end and really
Mhm.
take the time to research it and figure it out rather than finding yourself caught in a hard spot later when you haven't done what you needed to do, and then you end up not having the profit that you thought because you're having to pay off all these taxes that you didn't realize, or, fees that you didn't take into account and things like that. So I'm mostly interested in taxes for
Mhm.
our conversation today because that seems to be the area of the financial piece that people get really hung up on. So, can you give us kind of an overview of, for a handmade, like, small business, or it doesn't have to be handmade, but like anything online, a small business online, if someone is just beginning, what types of taxes, if they're considered self-employed, what types of taxes are there that they should be thinking about, and just kind of an overview of how taxes work?
So there are really two main types of taxes that any online small business owner should be aware of. They are sales tax, which are governed by your state. So it varies by state. And there are income taxes. And most states also have income tax, but the federal government, the IRS, really is overseeing income taxes. That's the tax form that you're already filing for April 15th. And when it comes to income tax, just to be really clear with types of taxes, we also have self-employment tax as part of your income taxes. And you may be prepaying your income tax bill, and that's what estimated quarterly taxes are called. That applies to some people, but not everyone. But those are the main two big types of taxes that you want to be aware of, that you want to be prepared for, and that you want to make sure you understand as business owners. Do you want me to dive
Okay.
into an explanation of what they
Yeah,
are?
let's tackle the income tax first. We'll do sales tax in a minute, but let's
Okay.
tackle income tax.
All right. So income taxes are federal and or state tax that's applied to your net profit. So that's going to be your sales minus your expenses equals your net profit. And the actual tax rate that you pay on that net profit will vary depending on lots of other stuff. But The important thing to remember there is that's why it's good to keep track of your books. That's why updating your numbers monthly, if possible, is ideal, because you have to file your income tax form once a year. And I see a lot of people backtracking an entire year's worth of transactions once their taxes are due. And that's very stressful. A lot of times you don't remember what you paid for 11 months ago, and you want to be able to accurately have those expenses tracked because they're deductions. They lower your net profit so that your tax bill is lowered as well. Income taxes, for probably like 90% of online business owners, handmade sellers, are going to be filed on what's called a Form Schedule C. So this is if you're a sole proprietor, if there's one of you running your business, if you haven't like incorporated, even if you're an LLC, which I know a lot of people get that LLC registration, you're usually taxed as a sole proprietor. So you're filling out this income tax form called a Schedule C. It's 2 pages. You can go Google it. Getting familiar with it is really helpful. It lets you know what you should be keeping track of in your books. But that Schedule C goes with your personal tax return. So it's not a separate filing for your business. It goes with your personal taxes. They're all due together on April 15th. You will enter your sales, you subtract out your expenses. Those are called tax deductions. Your net profit, whatever it is, will travel over to your personal tax form. And it actually, you're not taxed in a vacuum. It will get lumped in with if you work a day job and you get a regular W-2 paycheck, if you're filing with a spouse and they get a W-2 paycheck, it gets lumped in with all of your personal financial stuff, basically. So if you get if you get credits or take the standard deduction or anything like that, that can lower your tax bill as well. That's why I say your business is never taxed in a vacuum. So that being said, that's how income tax, the Schedule C works. If you make a profit on your Schedule C of more than $400, so sales minus expenses is more than $400, then you'll also be paying self-employment tax on that profit as part of your income tax liability. Self-employment tax, we can think of if you ever have worked a regular payroll day job before, your employer was likely withholding some tax money from your paycheck every week, every month, whatever. They were paying things like FICA, Social Security. They're withholding that kind of thing from your paycheck. As self-employed people, nobody is withholding that from our profit, right? We're just keeping all the profit all the time. So that's why the IRS has self-employment tax. They're like, hey, we need you to pay into Social Security and FICA and all this stuff. So we get hit with that tax at tax time. It's not, a lot of self-employed people think it's like a penalty for being self-employed, but it's really just putting us on more even playing ground, I guess, with typical day job employed people. So that's what self-employment tax is. And then if you think, and this applies for your personal income taxes as a whole, it's not really specific to self-employed people, but if you are going to owe more than a certain amount, like a good rule of thumb is more than $1,000. If you believe you're going to owe more than $1,000 on April 15th to the IRS or to your state government for state income taxes, it's ideal that you prepay your tax bill throughout the year. So if I think I'm going to owe more than $1,000 April 15th, 2023, then I may prepay my tax bill over the course of 2022. There are certain due dates for those prepayments, but that's what people refer to as estimated quarterly taxes. I'm just prepaying what my April 15th bill is going to be, which is a little difficult because you have to kind of guess what you think your April 15th bill is going to be. But that is income tax in like a 5-minute nutshell.
Yes, that was amazing. Thank you for breaking that down because, yeah, there's so many different pieces that go into it. So, just kind of digging in a little bit further, a couple questions. So, really, just two questions I thought of. So, self-employment tax, you said that's for people that make 400 or more, right? So, if you make,
Yes.
you don't have to pay that until you make a net profit of 400 or more.
Correct. Yeah. If you had a loss, then there's no profit for you to apply the tax
Okay.
to. And if it's less than, I don't, for some reason, they just have a threshold of $400. That's for self-employment tax specifically. There's not any sort of threshold for filing a Schedule C for having to pay
Right.
income tax.
Right. Okay. So everybody has to pay income tax no matter what. If you make $400 or more, you have to pay self-employment tax.
Yeah, which is
And
currently 15.3%.
okay. And then beyond that, the quarterly or estimated taxes come in. You said a general rule of thumb if you're just starting is like if you predict that you're going to be making over $1,000, is it like for this current year or the
That's
next
if
year?
you think you're going to owe more than
Oh,
$1,000
okay. So it's
in
not
taxes.
making
Yeah,
1,000. It's if you think you're going to
correct.
owe more
Yeah,
than 1,000.
a
So
lot
how
of
do
times,
people try to figure that out?
right. There's a form called the Form 1040 ES
Okay.
that you can work through to try and predict if you will owe, but it's basically like doing a guesstimated tax return for that next year. So it's very challenging because, again, your business isn't taxed in a vacuum. Like your business could do well, but depending on what's going on the personal side, you may end up not owing. What a lot of people will do when they first start out the first few years of running a business is if they work a regular W-2 job or their spouse that they file taxes with works a W-2 job, they might just increase their tax withholding from their paycheck, and
Okay.
that increased tax payment helps cover their business profit. Does that make
Okay.
sense? Because it's
Mhm.
all lumped together. At the end of the day, the IRS just cares about all the money you made and all that you've paid into your tax bucket so far that year. If you didn't pay in enough taxes so far that year, whether that be from your W-2 withholding from your regular paycheck, or whether that be you're prepaying those estimated quarterly tax bucket payments, not bucket.
Mhm.
If those aren't big enough, then we're going to owe at tax time. If you
Okay.
overpaid, then we get a refund at tax time.
Hmm.
Um,
Okay.
the goal is to get to zero, which is
Yeah.
very tough.
Yeah.
But you kind of have to. A lot of times you can look at like what happened last year. If I got a refund last year, 9 times out of 10, I don't need to be worried about estimated quarterly tax payments the next year, unless
Okay.
my business is going to go from like zero to bananas
Yeah.
and I'm going to have all this new profit, right?
Right. Okay.
Yeah. So the good rule of thumb is if you think you're going to owe over $1,000 in taxes, then it might be time to start prepaying your tax bill. But
Okay.
it's usually not something, unless you're really profitable right out the bat, it's usually not something most handmade business owners have to worry about in the first couple years of running a shop.
Will a business owner be penalized for not paying those estimated taxes if they needed to?
If you owe too much on April 15th, and too much can like vary depending on your tax situation, it's
Mhm.
possible that they will like basically make you pay interest on what you should
Okay.
have prepaid. It's usually very minimal, like 1%, but
Okay.
it is possible to be penalized. Yeah.
Okay. So if someone is just starting and they don't really know, but they think they might need to pay these quarterly payments, how do they do that? And how do they figure out for each quarter what amount to pay?
The best thing to do to start would be to fill out that Form 1040 ES. It's not something you
Okay.
submit, it's something you print that helps you figure out what you think you're going to owe. And you can take that amount and divide it by 4 and pay 4 equal payments. If you search search the IRS site for estimated quarterly taxes, they'll tell you the deadlines. It's not once a quarter. It's weird numbers. I mean,
Mm.
weird dates. but it's certain days of the year where each quarter's payment is due by, and you can set it up to do it online. You can write a check to the IRS. There's lots of different ways that you can actually pay it.
Okay.
The worst thing that could happen is that you pay it when you didn't need to, and then you just get that money back at tax time. So you're giving the government
refund.
that. Yeah.
Okay. Well, yeah. So that breaks it down. And then, year by year is like you can look at what you made the previous year to help you be a little more informed each year, right? About like what you can expect or what growth might be coming.
The longer you've been in business, the easier it is to start predicting these things. And you can see, like, I'm halfway through the year, things are going a lot better than last year. So maybe I need to increase my payment or start paying when I wasn't, or things are not going as well as I thought. So I don't need to be prepaying so much. Data is always, the more data, the better informed decisions you'll be able to make, right?
Yeah, for sure. One last question on this before we move to sales tax. So the quarterly estimated taxes are a federal thing. Is there anything on the state side that's happening too?
Yes. State income taxes work almost exactly the same as federal. And, not every state has income taxes, but most states do. But you can be doing the exact same thing. You can prepay your state income taxes as well. Because if you owe too much, the exact same thing will be happening, like at the federal level.
Okay. So to do that, would they need to just look up their specific state's website?
Yeah. Starting at the State Department of Revenue is always a good idea. Yeah.
Okay. Awesome. Wow. So that was just like so much great information. I mean, I feel like this is exactly the stuff that I wish I had just like laid out for me in the beginning. So that kind of covers like the income tax side of things, but let's move over to sales tax because we know this is a thing as well. When you're selling something, it can be confusing when you're selling online as opposed to selling like a brick and mortar store or something. How does sales tax work specifically for people selling on a platform like Etsy?
All right, great question. Sales tax is, in my opinion, a lot more complex because number one, the state governs it. So there are also some states that don't have sales tax, but every state does things a little bit differently. So always start at your state's Department of Revenue for resources on that, just to make sure that you understand how your state's dealing with it. But in general terms, sales tax is a tax that the end user of a product should be paying. So it's the last person to buy the thing, basically, is paying sales tax. What that means is that when you sell your product to a customer, your customer is paying you sales tax. You are just holding on to that sales tax collected and then remitting it or paying it over to your state government. Unlike income tax, if we're doing it right, sales tax should not be money out of our pocket, okay? We're holding on to it after our customer pays it, and we're giving it over to the government when it's due. So keep that in mind. Things to consider with sales tax: is your product subject to sales tax? If you're selling a physical, tangible product, it's usually subject to sales tax. Some states will have exceptions for necessities like clothing sometimes, or certain types of food. But most of the handmade physical products we're selling on marketplaces like Etsy are going to be subject to sales tax. Lots of changes have been made to Nexus, about the concept of Nexus in the past few years. So how it used to be and how it still is, it's just more than this, but how it used to be was that you had to charge sales tax to any customers in a state in which your business had a nexus, and nexus was defined as a physical presence. So if I'm a brick and mortar shop and you're coming into my shop, I'm physically located in that state. So I'm charging everyone who's buying stuff from my brick and mortar shop my state's sales tax, right? That seems easy. For online sellers, with physical presence nexus, even if you're just selling online, we still have a physical presence in that state. So I used to live in Texas. My feet were in Texas. Anytime somebody bought a product from me, earrings from me, and they were, even if it was an online order, if the customer was also in Texas, I charged that customer the Texas sales tax rate. So that still applies. That physical nexus, that physical presence nexus still applies. So that what that means now is most of us still, if your product is subject to sales tax, we need to get a sales tax permit with the state in which we are physically located, even if we're only selling online. And in general terms, we need to have our website set up to where we're charging our in-state customers the proper rate, which can be a whole like complicated question in and of itself, is figuring out what your sales tax rate is. But when I was selling earrings, if someone from Florida or South Carolina or Washington State ordered from me, I didn't charge them any sales tax, right? I don't have a nexus in, well, I think I'm picking all states without sales tax. I didn't have a nexus in South Carolina. That's where I am now. So I know we have sales tax. So I didn't charge South Carolinians my Texas sales tax rate or any sales tax rate, right? So fast forward to about 2018, all the brick and mortar retailers are like annoyed that online business people don't have to charge sales tax most of the time because they only have a physical presence in one state. And so there's a lot of, people theoretically ordering online because they're saving on having to pay sales tax. So all the states are like, let's get on more equal footing with online retail. We're missing out on our sales tax dollars. So sales tax rules started to change. And now we have this idea of marketplace facilitators. And we also have economic nexus. So you can think of this as like two more ways that sales tax could end up be charging. For Etsy sellers, the marketplace facilitator rules are really what is impacting us now. So now almost every state that has sales tax over the past 4 years, each state has kind of dripped this out one by one. But now marketplace facilitators, which are big websites that host sellers. So we're talking Etsy, eBay, Amazon. Those are like the big three. They are required, since they have such a high volume of sales, they are required to charge each state's sales tax to that state's customers on behalf of the individual sellers. So over the past 4 years, it started dripping out state by state. By now, every state that has sales tax is doing it, except I think Missouri is the last one. But by the beginning of next year, they're going to start too. So by the beginning of next year, it's safe to say your state, if it has sales tax, Etsy is charging sales tax to your customers for you. They are collecting it for you. They are theoretically remitting it for you as well. So it has graduated from on Etsy being in the seller's hands. You can't go into your shop settings anymore and set up your sales tax rates. You can't go into your shop settings and change who you want to charge sales tax for or to. Etsy is doing all of that for us now. And they're collecting and remitting for us. Now, that usually means, it definitely means if you're selling anywhere else other than Etsy, you still need your sales tax permit for your own state. And usually, even if you're selling only on Etsy, you still need a sales tax permit for your own state. What it means is that for all of your in-state Etsy sales, they're not subject to, you don't need to pay sales tax on them when you file that form anymore. So when you get your sales tax permit, the state is going to tell you, okay, file your sales tax forms with us every month on the 20th, or they may say every quarter, or they may say every year. The deadline will vary based on you and your state. So make sure you note how often they tell you to file. When you file that form, whenever it's due, your Etsy sales are basically non-taxable because they've already been subject to sales tax and Etsy is paying that on your behalf. So you still need to file when due. It doesn't mean that you don't get to file sales tax forms anymore. They'll come after you, even if you owe $0. It just means that your Etsy sales, since they're marketplace facilitator sales now, are going to be non-taxable or exempt. And every state's form will have a different place for you to put that in. Some of them have updated their forms to say like, hey, tell us your marketplace sales. And some of them will just have a place for you to mark them as exempt.
Okay. Yeah. So if they're going on to file that sales tax form, and let's say it doesn't have a specific place for
Mhm.
that to input the marketplace, do they need to include that amount when they're reporting how much they've made, or they don't even need to include the amount if it's on
Usually,
Etsy?
usually there's a place where the sales tax forms, most states will have a place where it's like, tell me all your sales, even if they were out of state, even if they were
Mhm.
out of country, even if they were on a marketplace, just like total sales and then taxable sales. So
Okay.
usually you'd include them in that total sales area, but the end goal is that you don't want to pay sales tax on your Etsy sales because Etsy's already done it for you. So however you need to properly report it to where that's what's happening, that's what you want to do. I have a lot of
Okay.
sellers in the past few years who are like, oh man, I've been paying sales tax on this stuff the past 3 years because that's how we used to do it.
Yeah.
And they didn't know, like they didn't realize now we're like double paying because
Yeah.
Etsy's paying it and we're paying it.
Yeah. Yeah, for sure. So just to make sure we're super clear, so Etsy is doing this on our behalf as Etsy sellers. Is there anything that we need to do on our end as far as the shop setup now for sales tax?
I think the only thing that you may have the ability to do is mark, I don't even know if you still have the ability to do this, mark whether your product is subject to sales tax or not.
Okay.
They might have taken that away too. I think that it may just be important when you're categorizing what your product is when you list it for the first time, because I believe that's how Etsy is determining whether they're going to tax your customers or not. And I
Okay.
know they're still kind of working out the kinks with digital products because I sell digital products on Etsy now and they're only subject to sales tax in certain states.
Okay.
But I think they're still kind of figuring out how to apply that across the board.
Okay. So for digital products, that was something I was going to ask about too. If they're only subject to sales tax in certain states, do you as the seller need to figure that out, or does Etsy just automatically
It's
know?
all, yeah. I mean, I'm not going to tell you that Etsy's always doing it right, but it's Etsy's responsibilities to figure it out. They have taken away pretty much everything that you could do. You used to be able to do because I've been on Etsy since 2011, so I'm familiar with like what you used to be able to input and the settings we used to have control over. Like you can't change it even if you wanted to at this point. And
Okay.
yeah.
What about for print on demand sellers that are using like a print on demand partner?
Right.
Is Etsy still in charge at that point of the sales tax?
Yes, I mean, Etsy is still going to be charging your end customer sales tax. The
Okay.
confusing thing with print on demand is that your print on demand printer or provider may charge you sales tax when you go to order it from
Oh, right. Okay.
them.
Yeah.
So, unfortunately, there's not a whole lot of wiggle room around that. It's something that we have to consider in our pricing structure when if we're going to sell print on demand. That I had an in-depth conversation with a friend about that the other day. She
Yeah.
didn't realize she was going to have to pay sales tax when she purchased the item, and that can eat into your margin really
Mm.
fast if you're not ready for it.
Yeah, for sure. For sure. What about also, you mentioned certain states still don't have sales tax. How do we find out if the state we're in has sales tax?
I just start by Googling, does Oregon have sales tax? You know,
Okay.
whatever state you're in.
Yeah.
There are some good resources like TaxJar. The Sales Tax Institute website is really good for summarizing some of that information. Um, yeah,
Okay.
but starting with
Okay.
your state's Department of Revenue is always a good thing.
Okay. Wonderful. Is there anything else about sales tax that we need to know as sellers that maybe we wouldn't think of?
I will add one more thing because I see a lot of confusion around this. Don't think that you have to deal with marketplace sales tax rules for your own business. This is something that is Etsy's burden, it's Amazon, it's eBay. Your business by itself is not a marketplace though. So the biggest thing that I see holding people up is they don't want to get started on like Shopify or their own website because they think that they're going to be required to charge sales tax to every state with sales tax. And they're like, I can't set up my site to deal with 45 different sales tax rules and rates and whatnot. You don't have to do that. You are not a marketplace. If you decide to get set up on Shopify or WooCommerce or Wix or whatnot, you only have to set up sales tax for any states in which your business has a nexus. And for most of us, that is just where you are physically located. We do have that third type of nexus called economic nexus. And that is different for each state, of course, but the summation of that is you have a nexus in a state if you have a big financial presence there. And that's if you're selling like a high dollar amount into that state, usually over $100,000 in sales to that state. So that doesn't apply to most of us. So economic nexus is not necessarily something many of us need to be worried about. I just want to mention it so you know it exists.
Yeah.
But if you get started on your own site, set up sales tax for your state, and then usually you're going to be good to go. So I don't want that to be something that holds people back from starting their own website.
Okay. Yeah, that's a great point. So with the physical nexus, like if they did start their own site on Shopify, or even if they had like, let's say on the side, they were selling at like local markets or things
Right.
like that. So they would only need to be charging and collecting sales tax for, let's say it's on Shopify. Would they need to charge sales tax if a sale came in from someone in their state where they have physical nexus?
Yes. Yes.
Okay.
And you
So they
can
would need
set
to do
up
that.
your Shopify site to do that. So like
Okay.
let's say I'm in Texas, I'm selling my jewelry, physical products subject to sales tax. I'm going to set up my Shopify site. Etsy's got sales tax going to everybody. In Shopify, I have my sales tax permit. I figure out the appropriate rate and I go into my settings and I'm like, hey, every time you see a shipping address in the state of Texas, charge them 8.25% sales tax on that sale. And
Okay.
Shopify will do that for me. I get the money. I hold on to it, unlike with Etsy, right? I'm actually going to get that 8.25%. And then I need to give it to the state of Texas when it's due every month, every quarter, whatever.
Okay.
But if someone from Idaho, Arkansas orders, they're not paying anything. I don't need to deal with sales tax for those guys.
Okay. So I just have another question. Sorry, I'm like thinking of all these questions as you're talking. This is just
These
like
are
a
all the
great,
questions people
yeah,
have. So
this is a great
you're thinking them
conversation.
too.
Yeah. So I've heard of, and I don't know if I'm using the right term here, but something like destination-based
Yes.
nexus. Is that a thing? And like, I guess people are concerned, it's not just where I am physically for my nexus, but like certain
Yeah.
states have this destination base, like where the product is actually being shipped to.
Right. Okay. So with a physical presence nexus, when we charge sales tax, some states have destination-based rates and some states are origin-based. So your state is either origin or destination. And what that defines is the rate that you charge still to those in-state customers, only related to in-state. So the origin-based states, Texas is one of them, you charge your Texas customers the rate based on the origin of the sale. So origin of the sale is where I'm located. So the city, the county and the state rate together, I think the state rate in Texas back when I lived there was like 7%, and then Harris County, because I was in Houston, was 1.25%. So all my Texas customers, because I'm in an origin-based state, all my Texas customers paid 8.25%. And I think like 7 or so states do it that way. That's the easy way. Destination-based is when the rate that's charged is based on the location of the customer, the destination, where it's going. So now I need to know the state rate plus the county or city, parish, wherever you're located, of where it's going. Still within your own state, But I think like Florida is destination. And back in the day, when we were still inputting this stuff on Etsy, you'd have to enter the sales tax rate of like every zip code. So it's like hundreds of sales tax rates that you could possibly have. Now, if you're doing like Shopify, I'm pretty sure like it automatically can do that stuff for you, or you can at least like upload a file with all the rates in it. But that means if I'm in Florida and I have my sales tax permit and I make a sale to another Florida person who's in a different county than me, that customer, that Florida customer's sales tax rate will be applied to that sale. Not my sales tax rate. That's what destination means. But
Okay.
again, it's still within your state. You don't need to know if you're in a destination-based state. Sometimes people think that means I need to charge the sales tax of wherever my customer is in the US. That's not what it means. It's just
Okay.
still within your state. Yeah.
Okay. Well, good. That takes out some of the stress of it. Because that was one thing that people ask about is like, is it anywhere? If it's a destination based state, if I'm sending it to a different state, does that still
Right.
apply? So it's
Only if
only
you had a
within
nexus
your,
in that other state, which you probably don't, right?
right. Okay. Wonderful. Well, this is just so amazing. I'm
Mhm.
so glad that we had this conversation. I think this is hopefully clearing up a lot of things for people. I wanted to ask you, just moving on real quick to like the best tools and software. So, we need to be from the very beginning looking at our accounting, keeping our books correctly, like you mentioned before, keeping tracking your sales, your profit, all of that. What are the best tools that you would recommend for every kind of budget? So for the person that's just starting, that doesn't
Mhm.
have really much of a startup budget, all the way to someone who maybe wants to invest more in their bookkeeping.
Yeah, there are a lot of options out there. Even if you're on a shoestring budget, DIYing right now, there's nothing wrong with just opening a Google Sheet and tracking your numbers in a Google Sheet, making your own system. You want to be logging your sales, you want to be logging your spending, those are your expenses. Um, you want to make sure you're noting any sales tax you've collected if you're selling off of Etsy so that you can make sure not to spend that money. But you can do that in your own DIY system if you need to. Um, we also have GoDaddy used to be a really big option, and that just got discontinued. So there's not a whole lot of options out there specifically for makers. There are Paper and Spark spreadsheets, which I've designed specifically for handmade sellers. There's ones that import in from Etsy, Shopify, Amazon. That's a one-time fee. So if you're not looking for like a monthly subscription, Paper and Spark spreadsheets are a great option for that. We also have QuickBooks. If you want a software option, QuickBooks is kind of the gold standard of accountants. There are lots of different versions of QuickBooks. Some are more complicated than others. Those are a monthly subscription fee. The one that Etsy partners with is QuickBooks Self-Employed, which is the least expensive option to use. So that's one worth checking out. The only thing that I want to note about QuickBooks Self-Employed is that it doesn't help you track inventory. So if you're selling physical products, you want to be tracking your inventory in a system that is set up for that. So you may need to supplement QuickBooks Self-Employed with like a DIY spreadsheet or a Paper and Spark spreadsheet for tracking inventory related stuff. But those are all pretty economic options for getting started out. Really just depends if you want to go free, monthly subscription, or a one-time fee. I will note too, the sooner you start two other things for like your record keeping, the better off your life will be. Save your receipts. You don't have to get like a receipt scanner or complicated software. You don't have to save the paper copies either. Digital copies are fine. Take photos, save them to the cloud. You want to hold on to those for like 3 to 7 years. So taking photos is a good idea. And if you do a lot of driving for your shop, like driving to the post office, driving to shows, start tracking your mileage. You want to have a nice mileage log for that. It can be a notebook in your car. Some people like to use Mile IQ, which is an app that I think you have to pay for. But that can be something that you potentially get to deduct at tax time. You just want to make sure that you're documenting it.
Right. It can be easy to overlook that stuff. And then you get to tax time, you're like, oh, I could have been using this as a deduction, right?
Yeah.
So yeah, keeping track of everything. I totally agree. Okay, so those Paper and Spark spreadsheets that you mentioned, I'll have that linked in the description of this video. So if any of y'all are interested in that, like she said, the one-time fee for that spreadsheet, you can find the link for that in the video description. And then Janet has also offered so generously to give you guys a freebie, which I'm really excited about. So Janet, can you tell us a little bit about the other thing that we're going to have linked, which is her freebie that she's offering to everybody?
Yeah, it's the Get Legit checklist. So if you are either working on getting your financial ducks in a row, or maybe you've been selling for a little bit and you're not sure if you have all your financial ducks in a row, the checklist is going to help you get there. So we're just going to work through, what permits, what documentation you need. And then I also have some information there on what sort of financial topics you may need to get up to speed on. So like how to track inventory, for instance. So it's a list of things to make sure you've done and a list of things to make sure you understand so that you can feel confident about the financial side of your business and move on to selling, making stuff, and making money.
Yes. Hallelujah. I'm so excited about this. This is exactly what we all need, whether you're just starting or maybe you've been in business for years and still are just like not clear on all this stuff. So I'm going to have that linked in the description as well. It's also here on the screen. Hop over there and get that checklist. It's totally free to you. And thank you, Janet, for coming and just answering all of our questions. This has been so amazing.
Thank you so much for having me. I'm happy to spread the word on these topics.
Yes. So where can people find you if they want to follow your other education? What's the best place for people to follow you?
I'm pretty much Paper and Spark everywhere. Paperandspark.com, Paper and Spark on Instagram, Facebook. I'm even on TikTok. It's so fun.
Yay, wonderful. All right. Well, you guys hop over and follow Janet. She has tons of great information on all things financial, especially for makers and creatives. And thank you again, Janet. I'm sure we will talk again soon.
Thank you.
All right. Bye.